The rating outlook for the life annuity sector is stable, and there's a number of different factors that weighed in on that decision to maintain the stable ratings outlook. Looking at it from a macroeconomic perspective, there's a number of positive signs in terms of an improving U.S. economy, relatively low inflation, and improving employment picture. We're also in what one would call the virtuous cycle in terms of credit impairments, very low credit impairments, which is a positive in terms of reported net income. That's led to consistency in terms of both statutory and GAAP operating earnings. We're also seeing benefits from an appreciating equity market, which we've seen over the last number of years, and that's led to higher fee income from higher assets under management, as well as reserve releases on variable annuity products. We're also seeing companies continue to focus on expense controls, which also helps improve the bottom line. Finally, we're also seeing companies continue to focus on risk management strategies in terms of model validation, in terms of product review, which has led to continued trends in product de-risking. We would actually expect, quite frankly, more of the same, and that would continue a trend we have seen over the last number of years. There are a number of different areas which challenge the life insurance industry, including the low interest rate environment, which has been an ongoing drag. We believe that we're in the lower for longer scenario, and that the continuing challenge of spread compression will be an ongoing issue for companies, at least for the near term. We'd also expect that companies will continue to look at ways to deploy technology, and that relates to a number of different ways in terms of improving risk management processes, but also looking at ways to reach out to distribution. One of the areas in which life and annuity companies need to improve is reaching out to the next generation, the millennial generation, and companies are looking at technology to use social media as a way to reach that group, both on the customer side as well as on the distribution side. We see a challenge for the industry being reinforcing the distribution side as that distribution force ages. We also see challenges coming from legacy blocks of business, such as long-term care and variable annuity business. Growth has been a challenge absent a number of products, specifically those products which focus on indices, index annuities, and index universal life products, actually are bucking the trend of slow growth in the industry. So part of that is due to the interest rate environment, as well as the positive equity market environment. We would anticipate that with some improvement in consumer sentiment and with the U.S. economy improving, that potentially we could see an uptick in growth. However, for the near term, we expect that growth overall will continue to be a challenge for the life annuity segment.